Hemang Jani, Senior VP of Sharekhan, joins us right now on Market Tracker to speak about his sense of the markets. Hemang, concerns galore notwithstanding, there was a brief rally yesterday on the back of, supposedly on the back of the move that the government took of hiking petrol prices. It's kind of stabilized today, but what do you think is the near-term mood of the market? Do you think a couple of these moves would enable the market to cross above the levels of 5,000, 5,100, reach those levels? Or you think the global uncertainty and the policy paralysis is large enough for us to be below these 4,900, 5,000 levels?
Well, clearly the mood is not good, and that is reflected in the way the flows are drying up, and we believe that overall the way people are downgrading the GDP forecast also reflects the slowdown in the industrial activity in the last 3 months, and the possibility of interest rates coming off immediately has also reduced. So we believe that there is not a case for a significant upside beyond 5,000, 5,100. But we believe that once there is some kind of a short-term resolution to the global issues, you might see at least stability coming to INR and the markets, because we've seen that 4,800 has acted as a very important support, and there is a huge amount of open interest built up around 4,800 strike. So that might act as an important support, at least in the short run.
Right. Some believe that at this point in time, Hemang, you could take a contrarian call on some of the cyclical names which have seen a fair amount of sell-off. Is that a position that you're also taking?
Yes, we have seen some kind of a pullback in stocks like ONGC and some of the banking stocks like ICICI Bank, State Bank and few others, primarily driven by the short covering, but we feel that any pullback that you may see may not be sustainable, and one will have to really take a quick exit. So tactical opportunities could be played out with some tight stop losses.
What about banks, and especially PSU banks? Are you upbeat on their performance from here on?
We believe that yes, some of the banks and the bank nifty also is looking quite strong, and it may give a quick up move of about 3 to 5%, particularly bank nifty, ICICI Bank and State Bank of India. But I think fundamentally we don't think there is a case for big upside from current levels, as the benefit of the rate cut would take a little longer to reflect in the higher margins, and the overall core growth will take a while to really go up.
We are looking at SBI gaining some momentum in today's session. There has been some interest coming in to some of the cap good names, L&T and BHEL, despite the slowdown in order book position. Are those stocks, from a value perspective, looking interesting to you right now, from a price to book perspective?
Yes, we feel that L&T is definitely relatively better positioned vis-a-vis BHEL, because though we liked the operating performance of BHEL for this quarter, we believe that the slowdown in the order flow is quite concerning, and their dependence on power sector and the fact that the government is not in a position to really do much in terms of reforms or kick-starting the investment cycle. We believe that L&T has a much diversified portfolio, and it also has a good exposure to exports. So a rupee weakening also has some kind of a benefit to L&T, and in terms of valuations, we find that L&T looks much better. So for a quick upside of maybe about 5 to 10%, L&T could really be looked at.
Do you track this group, Hemang? Adani Power, Adani Enterprises or Adani Port? Have you looked at the models? I mean, have you looked at the kind of valuations that they may be trading at, and do you like any of the group companies?
Well, we don't have any of these stocks under coverage, but we believe that the fall in the stock prices had something to do with some kind of a corporate governance issues also, particularly with respect to coal mining in Bangalore, though the company denied it subsequently. Also, we believe that there are concerns that some of these companies, particularly Adani Enterprise, the absolute debt level at which it's operating is pretty high, at about almost 4 to 4,500 crore, And in an environment where the interest rates are not likely to fall, there might be some issues. Also, they had actually slowed down their trading desk of coal because of the wild fluctuations in the currency. So because of these concerns, there has been a selling by the institutional investors. But we believe that at current levels, it might provide some trading opportunity, of about 10 to 15%.
What is it that you would be advising your clients to do? I mean, the markets are probably neither here nor there because the expectations of a fall are as high as an expectation of a rise. But good time to start portfolio building, you think?
Well, I think at the moment the current sentiment is so weak that it would not really make too much of sense to go and tell somebody to buy or accumulate stocks. But I think we are going to see increased volatility over the next 2 to 3 weeks as we continue to have global uncertainty. So it makes sense to buy this volatility by buying some call options and put options for next month. So we are recommending clients to buy a 4900 call of next month and a 4700 put. So buying into a straddle would make a lot of sense because either side there is a volatility, you stand to benefit.